So the message we're telling everybody is we've found good solid footing for rate. We think we're inflecting off the bottom, and from our seat we like and see encouraging signs, albeit a little slower than we may want coming out of the bottom. We are starting to see encouraging upward trends.
I'm here today with David Cramer, President and CEO of National Storage Affiliates Trust. David, thanks for joining us today.
Absolutely, thanks for having me.
The self-storage sector has historically demonstrated resilience during economic uncertainty. Is that the case today, and are you seeing any changes in customer behavior or health?
It's a good question. The sector generally responds very, very well in a lot of different economic conditions. And that's been one of the things I've been at this 27 years that I really appreciate about the sector. Our current tenant behavior has been very durable. We have not seen any change in their length of stay patterns or their ability to pay bills. All the metrics we study are very, very healthy from our consumer base, which is encouraging given the economic uncertainty that's going on right now.
And in your meetings with investors this week, is there a key strategic theme that you're focusing on?
Yeah, we've really been working with the group about, we've had an interesting ride as a sector and particularly as a company with the NSA around, we came onto an amazing time coming into the pandemic and come out of the pandemic. We had some of the best results we've ever seen, down to a housing market that's been very, very slow. And for us, transition is good for our business. And particularly in our portfolio, the housing market's an important piece of our business just because where our properties are located. So the message we're telling everybody is we've found good solid footing for rate. We think we're inflecting off the bottom. And from our seat, we like and see encouraging signs, albeit a little slower than we may want coming out of the bottom. We are starting to see encouraging upward trends.
Are you seeing any geographic shifts in demand or investment focus within your asset class? And if so, what's driving these changes?
The appetite for the product remains, very, very vigorous. It's a good sector. It's been a good sector over the years. There are lots of investors who want to be in the sector. So from the appetite of buying new properties and wanting to enter the market, it's still very, very steady and strong. The geographic focus, during the past couple of years, you saw a lot of focus into the Sun Belt, which has created a lot of new supply in the Sun Belt. And so as you think about those markets, they're facing a few more challenges just because of the supply-demand ratio. But we believe long-term that the Sun Belt markets are very, very healthy, and we have a very strong presence in those Sun Belt markets. But geography-wise, storage works in a lot of markets. We operate in 41 states. We have a very diverse portfolio. So overall, we think very healthy in most of our markets.